It is time for our deep dive. At number 5 is Walmart. Starting in April, the largest U.S. retailer will increase wages for about 500,000 employees. Workers will be paid $9 an hour. That is $1.75 more than minimum wage. The change comes as the company delivers mixed fourth quarter results. Shares are falling in the pre-market trade. I want to bring in Poonam Goyal of Bloomberg Intelligence to discuss this. So interesting. That was kind of the big headline grabber here, was their wage increase. It affects how many of their employees? I mean, it's 500,000, but how much of that is of the total?
So they have 1.4 million employees in the U.S., so it's about a third, but not all of them are hourly. So I would say it would affect a third to half of their employees.
Okay, and how significant is it?
That's pretty big. I mean, you've heard Walmart being criticized for not paying their employees well, not training them, not educating them, not really having a career path for them. So It's the first time that they're actually investing in their employees. That's great, from a social morale perspective, but it's going to have a hit to their operating income, and that's what we're seeing. We're seeing EPS falling short of consensus for the first quarter. 114 is what consensus expected, and the high end is 110 in their range.
Right, so it is clearly going to have a hit to their bottom line.
Absolutely.
But I suppose for their social conscience and for their brand image, is it going to make a big difference here?
I think it should really help because they have been criticized for this for many, many years. And this is the first that I've heard of them actually making a difference.
Okay, so on their numbers, their forecast did fall short. So what's going on here? I mean, I thought Walmart consumers were the most sensitive to lower gas prices. I would think that that would have really helped their results, right?
It absolutely did. Their results from a top-line perspective were very good. So they delivered a 1.5% increase in same-store sales in the U.S. stores, and that was driven by a 1.4% gain in traffic. If you look back at Walmart's history, the hardest part of achieving positive sales growth has been a decline in traffic. Traffic for the first time increased in 3 years. So that's a big positive, and it shows that fuel prices absolutely.
Okay, so then what falls into then what's happening with the forecast then?
The forecast is all probably driven by operating expenses rising due to these initiatives.
Okay. Future for Walmart. I mean, yesterday we were talking with Julie Hyman about the possibility one analyst had raised that maybe the company is too big to succeed, that perhaps it needs to be broken up. Is that gaining any legitimacy here?
You know, that's been talked about for years, the breakup of not just Walmart overall, but Walmart with Sam's Club and so forth. And they haven't expressed any interest or shown any interest in doing so. So I don't know if that'll happen, but it is too big, and their expansion will rely on international growth as well as small format growth.
Well, we heard last month, right, Target pulling back from Canada. Is that going to be, for instance, a big opportunity for Walmart?
I wouldn't say it's a big opportunity, but I do think it's an opportunity because Target and Walmart differ. Walmart really competes with the food retailers there, since 50% of their business is food, where Target it's under 20%. But it is a positive because they lose a competitor in the Canadian landscape.
And what about divesting businesses? I mean, what about separating Walmart from some of their other divisions like a Sam's Club?
They've never entertained that. Investors have spoken about it. They've asked about it because Sam's Club itself could be a whole different business.
Right, could it be a business on its own?
Yeah, but the reason that they give for not doing so is because they can leverage their buying power. And that helps them, according to the management company.
Right. Obviously, with inventory.
Inventory, pricing, purchasing, just overall clout it creates for better purchasing.
And the other big issue to watch for Walmart for the rest of the year will be what?
I think it's going to be their operating expenses. They guided to 1 to 2% comp store sales growth in 1Q, which is good, and that's a reflection of lower fuel prices.
All right, Poonam, thank you so much for joining us. Really appreciate it. Poonam Goyal of Bloomberg Intelligence on Walmart.